Welcome to the Transparent FX Academy. I'm Nick and I'm a top potter on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I want to speak about USD JPY because at the moment we do have quite interesting price action and structure. Now, as usual, first I will be covering the technical side of this market, then we will move to the order flow. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly, what we can see is that we have a market which has just broken monthly structure to the downside. In fact, what we know is that this area was acting as previous monthly resistance when it was tested and created this red candle. That resistance was then broken to the upside with this impulse. At that point, previous monthly resistance was turned support here. The market respected its zone and rejected the area to the upside. However, last month that just closed, we had a close just inside of the zone, showing that we didn't react to the area, we didn't reject higher. Sellers managed to create a close right in the middle of the structured zone. So at the moment, sellers definitely seem in control, and we could expect more bearish price action to develop for this pair. Now, if we drop down on the weekly time frame, what do we see? Now, from a weekly perspective, we can notice that we had the creation now of this impulse correction and impulse pattern to the downside. The market also rejected here the previous weekly support, now turned resistance, and we had the confluence inside of this zone also of the 0.5, so 50% retracement taken on the impulse. We can see how precisely the market tested its zone and rejected it perfectly to the downside. Now, in a situation like this, especially if the market seems to be ready to take out this previous weekly low, which should be acting as support because from here, all this move to the upside was created. So this area was confirmed as demand and support. Now the market is testing that zone, but it isn't really reacting to it in any strong way. We aren't seeing any major rejection to the upside, at least yet, which indicates that we could see a break below this zone. Now, a break below the area, if we drop down the daily time frame, could be even more clear what the market needs to do in order to create it. And it seems like from a daily perspective, at least, in order to continue lower, we will need to see a break below this support. If from a daily perspective, we get a break below this support, at that point, this previous support would become resistance. And at that point on the retest, that is where we would have good probabilities for a potential rejection to the downside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the JPY, we can see how we're continuing to getting stronger and stronger and stronger. We went from 102 minus 102k net positions with way more shorts than longs, 140k shorts and only 37k longs from an institutional perspective. We then started increasing net positions slowly and slowly all the way up to minus 37k net positions, where we reached essentially 67k shorts, so less than cut in half, and longs are now getting increased. We went from 22k to 29k. So institutions are adding longs and closing shorts on the JPY, making it stronger. So there is the possibility for a potential break below the zone because a strong JPY would make USD JPY become essentially weaker, because keep in mind that all currencies on the spot are traded against the USD. So if you're checking the data for the JPY, you're actually checking JPY USD. So if you want information on USD JPY, you simply have to reverse everything that you read here. So a strengthening JPY makes USD JPY weaker. Now, from here, the market could easily reject higher, but if we do get a break below this support, at that point, this previous support would become resistance here. And on the retest, we would have monthly, weekly, and daily all showing the same direction for a potential move to the downside, so all indicating for more bearish price action. Now, I did speak about USD/JPY in the past. I spoke about it after the creation of this W. From here, I made a full breakdown explaining all the reasons for which we wanted to see this rejection to the downside, which is in fact exactly what the market did. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. So if and only if the market will manage to break below the support on the retest here, how we could be approaching a potential rejection to the downside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment I'm running a huge special promotion in which you have a big discount from 497 euros all the way down to 97 euros for the lifetime access price to the mentorship program. And as an option, since I have partnered with the forex broker Blueberry Markets, if you decide to open an account with them from your student dashboard, you can then get a full refund credited back into your trading account. And if you scroll over here, you can see that there is still time to join before the timer goes to 0 and the offer expires. However, spots are limited, so if they get filled before the timer goes to 0, the offer will end anyway. So I really suggest that you join directly from here to gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.